President Hakainde Hichilema's commitment to delivering for Zambia has reached another clear milestone. This week, the International Monetary Fund confirmed the completion of Zambia's 38-month extended credit facility program, closing the chapter on debt distress and formally marking the country's shift from recovery to growth. The IMF's decision releases a final $190 million United States dollars, bringing the total IMF support to about $1.7 billion United States dollars.
Was concluded on the 27th of January 2026 when the IMF Executive Board made a decision. Once more, this opens the way for us, opens the envelope, space for us to do more in the area of investment and trade. With who? Within ourselves, our region SADC, our other regional bodies, East African Community, West African Community, North Africa, and indeed Africa as a whole.
But more importantly, it signals that Zambia has met the tough conditions required to stabilize the economy, restructure debt, and restore credibility after years of fiscal strain. This is the turnaround the president spoke about 5 years ago, and it is not finished. What this program really was, the IMF program was not free money for party after party, not at all. It was a reform agreement. It required Zambia to clean up public finances, rein in debt, strengthen institutions, protect social spending, rebuild confidence in how the economy is managed. That work is now paying off. What the numbers now show, according to the IMF's own latest indicators, economic growth recovered to 5.2% in 2025 and is projected to rise to 5.8% in 2026. Public debt has fallen sharply from about 130% of GDP to below 90% with a clear downward trend. Inflation is easing and projected to return to the 6 to 8% target range. Foreign reserves have strengthened, now covering about 4 months of imports. Private sector credit is growing again, meaning businesses are borrowing, investing, and expanding. In simple terms, the economy is steadier, shocks are fewer, and planning is possible again, from stabilization to expansion. This is why global investors are paying attention again. With debt restructured and reforms in place, Zambia has now moved out of survival mode. Policy in 2026 is now about protecting the gains and turning stability into growth, jobs, and investment. Copper confirms the direction. Zambia relies on copper for more than 70% of export earnings, and production is rising fast. In 2025, copper output increased 8% to a record 890,346 tons. In 2026, production is expected to cross 1 million tons. The long-term target remains 3 million tons. Mines that were idle for decades are back in operation. Assets that were falling are producing again. This is growth rooted in production, not projections. The logic behind the recovery. From the start, President Hakainde Hichilema's approach followed a clear sequence. Fix the fundamentals, restore trust, then grow. The IMF program laid the foundation. The reforms created certainty. Now the economy is lifting off. But as the president has repeatedly stated, this phase demands discipline. Growth must be protected by sound policy, reliable energy, strong institutions, and continued reforms. What comes next? With the extended credit facility now completed, government is already pushing a successor program with IMF. This is not because Zambia is in trouble again. It is because credibility must be protected while the economy expands. A successor arrangement helps to lock in fiscal discipline, anchor investor confidence, keep reforms on track during the growth phase, lower borrowing costs as Zambia returns to capital markets. In simple terms, it acts as guardrails while the economy accelerates. The president has been clear that Zambia does not want to slide back into instability after doing the hard work. A follow-on program ensures continuity, policy predictability, and confidence for investors, lenders, and citizens alike. That is how recovery is turning into sustained growth.